Welcome to the Option Tigers training videos. My name is Hari Swaminathan. In this video, we're going to study this indicator called on-balance volume. Now, as the name suggests, it's a volume indicator. And unfortunately, volume is a critical piece of information in the markets, but there are not too many good indicators. And this one happens to be a good indicator. And where the on-balance volume comes very helpful is if you can see a divergence between price and the on-balance volume. But let's step back. What does the on-balance volume indicator tell us? Broadly, it tells us whether there is buying pressure or selling pressure on a stock. And the way it does that is it carries a cumulative total of a volume number. And if you have an up day, which is indicated by green bars, then the volume for that day is added to the cumulative total. And if you have a down day, then the volume for that day is subtracted from the cumulative total. So what does this do? You can see the price action from the price chart, but what it tells you is the intensity of a buying day or a selling day, and how does that impact the stock in the long run. And that's how it tries to measure whether money is coming into the stock or going out of a stock. If you had a huge selling day, then that volume for that day is going to be massive. And if you take that out, that might change the charts a little bit. And that's exactly what it should do, because if you have huge days with huge volume, that should be reflected in the chart somewhere. Unfortunately, it's not reflected on the price chart. So the on-balance volume tries to give you a mix of both the price action as well as the volume action in a stock. So let's see what's happening with Caterpillar. Here we have Caterpillar, and you can see that from a low of 80, Caterpillar's made a nice move, and even the on-balance volume is confirming that. So at times like this, the on-balance volume does not indicate that there is some opportunity in Caterpillar. The only thing it's doing is it's confirming the price action and telling us that, okay, volume is coming in and therefore more money is pouring into the stock rather than coming out of the stock. However, let's look at these last 10 days or 2 weeks right here. Since this high, Caterpillar's price has been coming down, clearly. You can see that it's a down move. However, look at the on-balance volume. On-balance volume is not confirming that move. So this is called a divergence, and this is precisely where the on-balance volume indicator becomes very helpful, because you have two things. You can see the price clearly coming down. In fact, if you look at this blue line, that's the 5-day moving average. It has crossed below the 20-day moving average. So if you were just looking at the price, this is definitely a bearish signal right here. However, the on-balance volume is not confirming that. Yes, there's a little bit of a dip, a little bit of an angle, but certainly not like this. So what this tells you is that there is a divergence between the price and the volume. And who do you trust? Well, smart money always looks at volume, and there's this indicator also assumes that volume always comes in before price. So volume is sort of a leading indicator. You can see volume coming in or going out of a stock before any big moves happen. And that's true in many cases. If you've seen our courses on smart money and volume analysis, you know how critical this is. So what this means is that this price action to the downside may be misleading, and therefore Caterpillar is going to find some kind of a support area sometime, and it's going to move to the upside. So this prepares you for a long trade on Caterpillar. Unless you see on-balance volume also coming down significantly, as of now, this looks like a pretty good divergence for a long trade. So if you wanted to take a long trade right now, you should look at it at a minimum of a 3 to 6 month option. A long call would be perfect, out of the money, perhaps at about 105 or 110, and try to make good returns, but don't risk too much money. By going a little bit out of the money, you won't be risking much. So that would be a good trade in this particular instance. I hope you enjoyed this video. If you have any questions, please email us at info@optiontiger.com. Thank you.